So I found this article here on the BBC News basically going over the car loan firm payout scandal that's been rambling on now since the back end of 2024 here in the UK. Essentially, the quickest way to describe it is that the government has stepped in, the Treasury of the government now has stepped in to basically stop a lot of these companies going bust because they have not paid out, or they've not made customers the funds available when they should actually be made available to them. They've not been given a certain amount of money when they should have been doing, and now because of that, a lot of people, thousands upon thousands of people, are potentially going to claim compensation on this, as they should do if they are entitled to it. So it's fair game at the end of the day. Now, the decision's been reached on in terms of the punishment for this and everything, but there's going to be a appeal. There's going to be appeal in April times. This is not ended here by any means, but basically the Treasury has stepped in to try and keep these companies from going bust, because if they go bust, then unfortunately for them, that does mean that eventually the market when it comes to car finance is going to be a lot less competitive, less companies out there. You get closer to a monopoly. I know it wouldn't be a monopoly, but you would have less companies, therefore the market is less competitive, therefore customers have to pay more, and if customers have to pay more, they might not pay because they might not literally be able to afford it. But let's have a look at this, guys, here. Full article on the BBC News. Shout out to these guys for covering this. The government has intervened to stop car loan firms from potential multi-billion-pound compensation payments over concerns they could have a significant and potentially damaging impact on the motor finance market, because Lord knows that the automotive industry right now in the UK needs all the help it can get. Last year, the Court of Appeal said that the lenders and dealers should have communicated clearly to customers how much commission they were making from selling loans and compensate them when this did not happen. Moto Novo and Close Brothers, two of the UK's biggest car finance firms, will appeal the ruling in April after hundreds of thousands more customers came to the financial regulator with similar complaints of being missold car loans. The government said that while it wants to make sure customers get redress, it also warns the motor sector to be continuing to support millions of motorists to own vehicles. The vast majority of new cars sold in the UK and many second-hand ones are bought with finance agreements, because buying a car outright lump sum wise is a lot. It's a massive investment. It's like a house deposit or something like that, and it's hard enough to get a house deposit together, let alone effectively the similar kind of amount you'd need to have another big thing like a car. So a lot of people go with these loans. It's kind of the in thing, really. It has been for a long time in the UK. Some analysts estimate that the total payments could reach as much as £30 billion in a scandal that could end up being the largest compensation scheme regarding financial products since the payment protection insurance saga, PPI. If anybody knows about PPI, it's us here in the UK. That has been something that I think you still get the odd call or email every now and again saying, have you been missold PPI? It was a massive thing about 5 years ago or so, and the preceding 5 years before that as well. As well as the size of compensation bill, the Treasury submission to the Supreme Court, which it confirmed to the BBC it has received, includes concerns that any uncertainty could undermine the UK's competitiveness. It is understood that the Treasury's intervention could be the show that the UK is still a good place to do business and emerges as Chancellor Rachel Reeves is at the World Economic Forum in Davos, Switzerland, to speak to world leaders. Her budgetary decisions have not buoyed investors' confidence in the UK economy as borrowing costs have continued to soar. There's many reasons for that, but I'm not getting into that right now. It's a sad state of affairs in the UK right now. Some customers have said the commission on car loans was agreed in secret. Marcus Johnson, 34, from Cwmbran in Wales, I've been passed through there, it's not too far away from Cardiff, bought his first car, a Suzuki Swift, in 2017. However, he said he was not informed that the car dealership was being paid 25% commission in what was added on to what he already had to pay back. I signed a few documents and then drove away in the car, he told BBC in November. His was part of the landmark case with two other claimants where the Court of Appeal ruled that the finance company should pay the hidden commission plus interest back to Mr. Johnson. He is due to receive just over £3,200. I mean, you'll take it. It's not a massive amount of money, but you will definitely take it. I mean, if you're entitled to it, get it. Simple as that. In 2021, the Financial Conduct Authority banned deals in which the dealer received a commission from the lender based on the interest rate charged to the customer. It said that it provided an incentive for a buyer to be charged a higher than necessary interest rate. Since January last year, the regulator has been considering whether compensation should be paid to the people with these deals before 2021. That created the prospect of banks and other lenders having to make payouts totaling millions of pounds. In October, the decision at the Court of Appeal broadened the net of those who could receive compensation, potentially increasing the lender's final bill to billions. The FCA has been asking the affected customers to make complaints, potentially meaning hundreds of thousands have come forward. The car finance industry has set aside a huge amounts of money to pay for possible future claims. If multi-billion pound fines are imposed on auto lenders, it could also lend some finance companies to go bust, thereby undermining the competitiveness of the market. Two of the biggest firms in auto loans saw their potential share price rise after details by the government's intervention emerged. Lloyds Banking Group share price rose by nearly 4%, while Close Brothers' stock jumped 21% as a result. Right, so it's an interesting old thing that's been rattling on for a bit of time now. I mean, it's been going on since November, like the article says. In terms of the knock-on effect, I mean, it's pretty bad for the car finance industry. Let's not get away from that. You know, it's pretty obvious this would not be a good thing. If companies go bust with that, which you might think, oh, well, they deserve that. They've done something wrong and they should be punished. And I get that school of thought for sure. But from the negative point of view of that, you know, if you've got less companies there, the market is less competitive, therefore they can be a bit extra when it comes to the price that they're actually charging people, which is not good. You don't really want that, especially if you're a customer, of course. So it could have a knock-on effect with that. But if at the end of the day, if there's things that haven't been passed on to the customer, if there's been money that's not been paid to customers or anything that they've been entitled to and it's just kind of been withheld effectively, then they really should be paying that out. We'll have to see what happens. Like they said, they're going to repeal it in April, but we'll see what happens, guys. I'll bring you anything as I find it here on the motoringchronicle.com as always. And yeah, have a good week, everyone. If you want to see more content on the weird and wacky world of motoring, I did a video recently going over the Tesla graveyard in Australia. There's a few of those, actually. So check out that video if you've not already, of course, here on the motoringchronicle.com. But yeah, have a good one, guys. Like, share, comment, subscribe, and we'll see you very soon.